Good morning, traders. TGIF. Today is Friday, July 15th. My name is Charles, and this is the Pirate Traders live stream. Today is an options expiry, a monthly options expiry Friday, so worth keeping that in mind. All right, well, what are we looking at here this morning? Once again, the overnight traders get to have all the fun. Of course, as expected, they traded right up to the opposite end of balance once again. So we are now on like day 3 of a balance area. Broken it 2 days ago. Overnight took us to the opposite end. We looked below and failed, pulling back into the balance area. So the next day when the market opened, we took it straight up to the opposite end of balance. We looked above and failed, pulling it back in. So the overnight that night took us back down once again. Yesterday, we fought a good fight in the morning. We tried to break out to the downside. The sellers really gave it a go, but they did not have enough sellers to get continuation to the downside. So it pulled right back up into balance and then ding, ding, right to the opposite end once again. So essentially what we're looking for this morning is probably trade that will be very similar to what we had yesterday, but just up here to the potential breakout to the upside as opposed to the potential breakout to the downside. So expect some chop early this morning and some grinding around for the market. Same thing as yesterday. We have a large gap up. Large gaps often don't fill on the first day. So the first order of business is a counter auction to the downside, trying to fill that gap, and we'll look to see, can the market get back to yesterday's high? If it finds support anywhere above yesterday's high, turns around and starts heading higher, that is a gap and go, which is bullish. Or if it pulls down to yesterday's high, finds support there, turns around and heads up, that is also a gap and go. And again, that is less likely today because the gap is so large. But of course, that's exactly what happened yesterday as well to the downside. So that's the first order of business. Can they fill the gap? The next thing is, can they get back above the balance area high? So about 38, 34 area, and then find support up there. So say they try to fill the gap. They only get in here a little bit. They find support. They push above. That's bullish. They come back down and they find support here. That is extremely bullish, as a breakout of balance will lead to excess to the upside. So that would increase the odds the market would start trending higher. But if it does not, if it pulls back into the previous balance area and then it doesn't come back out, well, then the target becomes the opposite end of balance to the downside. So same thing as yesterday. There's a battle to be fought right around this balance area high. And whichever way it breaks, expect excess in that direction. Remember, I literally said this exact same thing yesterday. Okay? When we opened right here at the balance area low. I said, I don't know which way it's going to break, but it's going to get excess in whichever direction it does. Well, look at the excess we got to the upside. That exact same thing can happen again to the downside or to the upside, depending on which way we break. Patience will pay this morning. Patience will pay. But first order of business, can they fill the gap? It's also worth noting, as we bounced off the balance area low yesterday, we left a ton of weakness behind. So that just slightly increases the odds that we might need another rotation back down. All right, the market is open. First order of business, do they fill the gap? So one potential way to play a gap fill on a day like today where it starts pushing, the same direction as the gap is when the market pulls back down through the opening price. You could go short at the opening price with your stop above whatever the high is at that particular moment, looking for that gap fill. And then as soon as you get a little bit of distance on it, just move your stop below your entry. If you have not yet, please smash that like button. Got 150 people hanging out, 45 likes. Come on, it's Friday. Let's get to 100 likes. Let's just make it happen. All right, so once again, as we pass through the opening price here, 38.40, we begin to try to fill the gap. There is a lot of support around the balance area high. So between like 38.33 and 38.20, lots of support in there. And often large gaps don't fill on the first day. So we may not get a full gap fill, but if they pass back through that open, they will try. Man, this support here at the opening price is insane. Just waiting for some capitulation, some break. Okay, here we go. So far, very few sellers piling on for a gap fill. That is bullish. All right, so now we're starting to push into this support over here on the cumulative, which is the balance area high. So if you're in that short for the gap fill, it might be worth just moving your stop below break even. If they're going to go fill the gap, they should do it now. But if they fail, it could be very bullish for continuation to the upside as a gap and go. Scoopball says, still no liquidation. No, you're right. There's no panic. There's no piling on of shorts to try to fill the gap. It's worth noting that sometimes on monthly options expiry Fridays, we have kind of slow, boring days that have tight ranges. It's not like a super high probability, but it is something that happens sometimes. Okay, so that's support so far at the balance area high. That's bullish. Can they get back above the opening price? Let's pop over and take a look at the NQ. So NQ is also in a balancing area, but it's much harder to read. You got a balancing area on like a larger weekly range. It looks like this. But in terms of the last few days, it's probably something more like this. Maybe like that's the balance area high. All right, so some sellers starting to pile on here, looking for that gap fill. Screwball NQ got a half gap fill. Good times. The reason he's bringing that up is there is a very high statistical probability of a half gap fill, significantly higher than a full gap fill. Xavier, where would support for continuation higher be? Well, pretty much where we're getting it right now. This node right here, this big cumulative node, this is the balance area high. So this is the area where the market has been running out of steam and reversing the last few days. So you can see how much trade we had in here. Breaking below it here caused this sell-off to the opposite end of balance. Failing to break out above it here caused that sell-off to the opposite end of balance. So if that area that has been resistance for the market now becomes support, it sets us up to break out of balance. And a breakout of balance would lead to excess to the upside, just like it did the last time we broke out of this exact same balance area. Right? We did the same dance. Look at where we are right now. Exact same area. We did the exact same dance. Testing, testing, testing. Man, where's my marker? There we go. And when it finally broke out, boom, caused excess to the upside. So if we can find support in here, we can turn around and head higher. But the first order of business for the market is trying to fill the gap, which is lower. So until that move is exhausted, we won't flip and reverse. So keep your eye on them ticks. It's also worth noting the more time we spend below the balance area high, the greater the bearishness becomes as a potential look above and fail, sending us back down to the opposite end. So if the buyers want to break out, this is their chance. All right, well, I just talked myself into bearishness as a look above and fail. As long as we remain below the halfback, I remain bearish. So as long as we remain below this line right here, currently at 38.35, I remain bearish for further downside continuation. Okay, new sellers starting to pile on. Can they get them ticks back below the zero line? All right, so we're looking for this support to become resistance now. The area that was support earlier, this balance area high, to become resistance for new sellers. Ooh, support. Oh, shit. WTF. Something just happened. Man, somebody in the chat said to expect volatility at 10. What was it about? The University of Michigan sentiment being 1 point off from its forecast? Oh, no. All right, well, they broke out back above the balance area high. So let's give this a minute to absorb the move. We'll let those bots battle it out here. But if they can come back down to this balance area high and find support, they can start to pump it higher. But I'd wait to see, because this could just be a fluke. Xavier, what does that mean? What does what mean? So basically, that big move that you just saw happen out of nowhere, that was bots. That was computers reacting to the news. So we got to give them a few minutes. All those algorithms have to run and respond however they're going to respond. And then other algorithms have to respond to those algorithms and respond how they're going to respond. And then arbitrage algorithms have to respond to those algorithms. So we got to give it a minute to like work all this out. And then we'll see, are we going to get support here or not? Obviously, you should have been stopped out if you were short the market when we blew through the opening price once again. Screwball, can we get support at the opening? I don't know. It's like I said, let's give it a second to kind of work itself out. We also have this funky gap in the B period where it moved so quick they couldn't even fill that in. That to me is similar to single prints. There must be some business to be had in there. So I would say look for support right around the balance area high. All right, so now does this balance area become support? Balance area high becomes support? It's funky because of that news, the movement based on that news, but this is technically a gap and go still. So if they can push back above the opening price and start to get the ticks trending higher, They can get some momentum. But of course, if they pull back down into that balance area, then we know it was just a fluke. And the gap fill comes right back into play. Skewball support at the open didn't hold. Gap fill in play. Not yet. I'll say gap fill once we're back inside the balance area. Once we're back below 33. Right now, I think the market's just trying to decide. This is just chop. All right, so now we got the ticks are starting to trend higher. They're starting to pump a little bit. We worked our way back above the opening price, back above the overnight high. So let's see if this can become support now. Right around 38.39. If so, I'll get bullish for continuation as a breakout of balance. Okay, so we're looking for support between like 39 and 42 here. Can this area hold? All right, looks like support to me. So I am bullish as long as we stay above the halfback. Actually, just a little bit below. As long as we stay above 38.36. I'm looking for the buyers to step in. Xavier, when exactly do we know it's a gap and go and price won't come back to fill the gap? Well, first off, today is a unique situation because we're at a balance area high. So balance area rules are more potent than gap rules, first and foremost. So that kind of makes it a tricky day. But you never really know. The assumption is if they can't fill the gap, that should be the first thing the market tries to do. So whether they spend 10 minutes trying to fill the gap or they spend 2 hours trying to fill the gap, you don't really know. But it's like they should be trying to fill the gap. It should be resistance and getting pushed down. And it's when that's over and it turns around and starts heading up, if it didn't fill it, then you know, okay, cool, it's a gap and go. So it looks like they were trying to fill the gap. That piece of news came out. The market pumped up. So then we were like, okay, well, we don't know. But now these new buyers stepping in right here, they're telling us that that attempt to fill the gap is probably over. And then you go, okay, well, then it's a gap and go, which is bullish. In combination with a breakout of balance, which makes it even more bullish. So the bulls have a chance here to start pumping. Can they do it? The door number C, though, as I mentioned, is just a grind right here on the balance area high for hours, maybe even all day. That's not impossible. Particularly with the fact that the monthly options expire today. So there's going to be a lot of portfolio rebalancing happening. Did I say door number C? Yeah, I was testing your... Were you paying attention? Clearly you were. You passed the test. Congratulations. All right. Well, the Q is losing it on the ticks. Can the ES keep these ticks trending higher? All right. Testing the support once again. Nope. Couldn't quite hold it. Ticks are now back below the zero line. Well, I smell chop. I smell rotation right on the balance area high. Just like yesterday. Man, it is not often I get fooled like that. They just got me. They shook me. Those sons of guns. All right, so once again, looking to test that support right around the overnight high. I'll get long again if the buyers step in there. 38.42. Bullish for a breakout. Bastards. Coop, it's a run your stop and go. I mean, they literally did that exact thing to me. They literally tagged my stop by like a point and then turned around. But the good news is they'll pull back into support and give me a chance to get back in. They always do. Tighter stop this time, less risk. More certainty the trade will work out. It's like missing the train. Another one will be along shortly. All right, so once we repair this weak reference we left behind from the 12th, this weak K period high of 55, we'll be pushing up into some resistance. So we'll look for a pullback to test the support around 45 once we do. Once again, I'll just reiterate that this does count as a breakout of balance. And a breakout of balance often leads to excess. So they can pump it for a while here. All day long if they want. If you have not joined the brigade, I would encourage you to give it a try. It only costs $10. Think about that. $10. less than a single tick on the ES. And you can listen to me and my smooth, reassuring voice all day, every day. If not, we will see you on Monday morning. And I hope everyone has a really great weekend. You could also check out in the description. You'll see there's a link to the Market Profile e-course. It's the one with the little brain and muscle symbol. Worth checking out the e-course over the weekend if you've been finding the two-way auction to be interesting. An interesting way to look at the market. Definitely some great insights there. So, sayonara, and we will see you on Monday morning. Thank you very much, guys. Have a good one. I am bullish, by the way, for continuation to the upside.